Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Friday. Happy Cinco de Mayo, everyone out there. This is Friday's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a good show for you folks today. Of course, we're going to talk about IBM. Warren cutting his stake. It was announced or leaked, reported, I should say, by CNBC yesterday, very late into the night, and we see the reaction just from that this morning. We're going to talk all about IBM and who is hitting that thing down. Also have some earnings to get through: CBS, Zillow Group, SHAK, Herbalife, ATVI, Zynga, Cigna. Couple notable ratings changes. Jobs number, of course, at 8:30, and maybe we'll get to some Kentucky Derby talk at the end of the show. Our guest today is at 8:35. He's going to be Salem Abraham, the president of Abraham Trading. He's a commodities and futures trader, so looking forward to having Salem on the show. Joel, how are we doing in the S&Ps this morning?
We are doing okay, Spencer. We are up a point ahead of the jobs number. I'm not going to give a lot of numbers in the S&Ps. I'm just going to tell you we've had 5 of 6 closes within 2 points of each other, 23.85. We're either going to break above 23.90 and keep on going, or break below 23.75 and go into the ditches. Major consolidation here on this Friday. Crude, not even getting a bounce. You could see crude down by 16 cents, walloped yesterday, and you've taken a little rebound overnight. Yes, there is, because they got down to 43.76, so a little panic selling, but on the rebound now, keeping an eye on the closing price in crude. Gold got walloped yesterday too, down, got hit $20, back 440 at 12.33. Silver down, up 8 cents at 16.38. So a little bit of bounces in gold and silver, but nothing compared to the wallop it took yesterday.
All right, time to bring on Dennis. And there was a bit of...
I'm mad at Dennis.
There was a bit of a lively debate.
I'm mad at Joel. We're mad at each other.
Okay. Why exactly are you guys mad at each other?
Mad morning.
Why exactly are you guys so mad?
Okay, so we got an argument on the IBM. So give us the news here exactly on IBM, Spencer. You teased it in the intro there. So Warren sold some shares. Give us how many shares did he sell?
Yeah,
what did he do?
Warren sold some shares reported by CNBC. Of course, they are reporting live from Omaha for the big annual shareholders meeting tomorrow. So they're all there, and he told CNBC last night, and they tweeted this at pretty late. They tweeted at around 8:20 p.m. that he told them he had sold about a third of his position in the first and second quarters of the year.
Okay, in the first and second quarters of the year, first of all, the stock was $170 to $180. It's now $159 at the close. And now, because you have everybody that just follows Warren Buffett here, and we got to do exactly what he does immediately, they're selling it down here at 154, 153 here this morning. It's down 5 points because Warren sold some shares. It seems pretty ridiculous to me. I know that's what they do, though. I mean, it's not like it's misinformed. This is probably where it's going to open. It's down $4 or $5. But do you really need to follow Warren that much? I mean, you're not getting his price. Said he sold in the first and the second quarter. Well, the first and second quarter, he might even sell over $180. And he only sold a third of his shares. And now you're selling it here this morning if you're coming in at 154. Joel, what are your thoughts on this IBM? We had a fight right before about this. Give me your thoughts.
And I want you to listen up, Dennis, because I am your mentor, okay? And
Joel did teach me. That's true. In 1999, I started Bright Trading, and Joel was my trading supervisor. And Joel taught me everything I know, but now I'm arguing with him on this one.
Okay, all right. I can temper what I said on the pre-market show a little bit. Okay, what I'm trying to say, and the point that I did not get across to you successfully, is that not only are people bailing on the stock that came in long IBM, but there is fortuitous traders out there that may be short the stock.
That's
right?
too big of a word for
okay.
me. I'm not an English major. I'm a trader. So fortuitous. Okay. Sorry to interrupt you.
Okay. There could be a chance some of the volume out there could be traders, institutions, people that are short the stock, okay? And in order to bring it in at a lower price because they know this is a ridiculous sell off based on this, they can get a feel for the market where the true bids are by hitting those bids, right? So that's the only thing. I'm not saying anybody's doing any layering. I'm not doing anything, illegal. Is what I'm saying is you're getting a feel in the market. If you're short, what if you're short 2,000 shares and you're just feeling really good today and you don't get, you got a great average on, you don't mind, wasting a couple hundred shares to get a feel for the market. So that, there are people selling, panic selling on this, but there also are very, very skilled traders out there using the bid and offers to find out where there are true buyers.
Well, you made that argument much better than you said in the pre-market show, and I will agree with you that there is definitely, if you are short 2,000 shares, let's just say last night, well, actually it was closed when the news broke, but let's say you came in this morning. What's the high today? What's the pre-market high? So I'm just curious, if this opened up like 150.
Right. Oh, way up at what time did he say this?
Yeah,
I think it was after 8 o'clock. Was there anything traded before 8 o'clock on this? Because somebody, has always said
yeah, there was. Yeah, because the pre-market high was
after hours last night.
Yeah, actually this morning, Dennis, it was after 4 o'clock. 57.85, and then this must have happened around 6:45, 7, because that's when the volume came in. So if you were there,
but
Dennis,
it was last night.
No, this happened last night. This happened at like 8.
Oh, really?
This happened like 8 p.m. last night.
This is the only news on IBM, though,
yes.
correct?
Okay.
There's no other news. There's nobody downgraded today. There's nobody.
No.
This is the Warren Buffett.
No.
Okay.
The Warren
high
Buffett
since he said this, 57.85.
Okay, so you've sold off significantly. So if you were an astute trader and you were shorting it this morning, at 57, if I was up and and I saw Warren Buffett selling, I'd maybe hit it down $1 because there's going to be other people that are going to follow suit. I mean, it's the same thing with the Kramer effect, and this goes to show you, just how many people are just following everybody else. Traders aren't thinking for themselves, it doesn't seem like anymore. It's like, that's why I always say, like, the momentum market, it gets going in one direction, people start seeing price go up, and then they all clobber in there because, oh, the stock's going up, I gotta buy. This is, indicative of a bull market, when you've had this really, run here, momentum market where everybody's got to get on board, nobody's thinking for themselves anymore. So they come in this morning, they see Warren selling, I'm selling too. You get people that say, okay, I'm selling short too, because Warren's out, so I'm out too. But Warren only sold a third of his position. And he was selling up at 175, 180, 170 probably. We don't know the prices yet, but if it was in the first and second quarter, the stock was significantly higher than it is now. So I think these people are all late to the party that are coming here selling just because Warren now. And I think, this move is, and I'm not, I don't know if I'm a big fan of IBM. I like the dividend 3.9%, but it's maybe not the best stock to say. But typically these moves, when they sell off, late, just on because some, it's Warren Buffett, but typically these are fades, meaning, typically this stock would probably come back. But again, this is IBM. It's got some trouble. Maybe it's going to have continued fall through. The momentum has not been on its side. It's not like it's out of the blue. So I'm not coming in here and buying it this morning for that reason. But all I'm saying is there's so many people that are just following what everybody else says in this market. They're glued to their CNBC. They're watching, and Kramer is great. He's very informed. I mean, Jim Kramer, gives an argument like nobody else. But the Kramer effect is, almost to a ridiculous level here now. He will mention a stock on Mad Money. It'll pop 2-3% because Kramer mentioned it. How many times the next day does that 2-3% Kramer pop, fade right back? Now, this is Warren Buffett. It's a little bit of a different story, but all my argument is that there are so many people that are not thinking for themselves anymore. They got to listen to what everybody else says, and, they think, oh, Warren's selling, I'm selling too. But let's really dive into the facts. He sold it up at 170, 175, 180. And you're selling at 153 today because Warren's selling? I think that's uninformed to me.
And I agree. And he may even be out there buying, doing a little bit of a scalp.
I was going to say, if I were him, I'd buy right back.
153.05, folks.
Yeah, you know what? They do that. No, Warren's not one that does that, but there is traders out there that actually probably do that. They get their position on, they talk their book, and Warren is not like this. Warren, if somebody's went and got this information, Warren's not like talking his book, but there's traders that do that. They get their position on, they talk their book, stock goes in their direction, and then they cover in, and then they go the other way. I mean, there is, even Icon. I mean, how many times, does Icon, he talks his book. He tweets his book. He gets a position on. He says, okay, he builds a position, says, I'm long this stock. Stock pops 7-8%. Don't tell me he's now coming in and taking some profits on that. It's like a license to print money. Now, Warren, completely different story because he's not like that. I'm just, giving the example that so many people are just following what everybody else says. It's just like people don't think for themselves anymore. It drives me nuts.
Yeah, great points. 53.05, that's your pre-market low. Dennis thinks that's going to be the low for the day.
What is the low?
53.05.
Oh, I don't know if I'm going with that. But there's more lemmings to come, Joel. More people who are just going to follow things. Maybe they're right. Maybe it's going to continue to fall. Maybe this is the end of IBM. But he still owns 2/3 of his position. This still has a 3.9% dividend. This stock was loved by the street 2 months ago. It's now hated. Momentum market. It continues. I don't see much support really in the charts and Joel, give us some levels too, because this is where your expertise lies as well. But, you're probably better with the numbers than I am. But, I don't see much till 150, really.
What? Yeah, you got to give an area on a big stock like this. So just my final comments on this: 151 even. That was your low back in November. You get a nice round number like 150 even. Dennis mentioned, and that was a monthly low in July of last year. So we'll see what happens. I think Dennis, you made some great points on that, and the best point is he was selling in the first quarter. So his average sell might have, when we had this consolidation up here at 175, 180, he was just peppering bids. And you know what? You got to be skilled to get out of a lot of stock in an issue like IBM.
It takes probably days for him to get out of stock.
Yep.
The real skilled traders are probably sniffing that out. That hey, every time we're seeing bids get hit. We're seeing iceberg orders out there. We're seeing some stuff. Some big fish has been dumping some stock. That's where the real skill is. Where they're sniffing out those orders. But and that's how, and a lot of high frequency trading machines can do that too. But just coming in here now and selling, and and Buy Apple in the chat's asking me, Dennis, does that mean you're coming in here this morning and buying the dip in IBM? No, because it's IBM. I don't really care for IBM. I think they haven't really figured it out, where they're going here. I like it as a value stock. I just think it's, when I bought IBM was a while ago, and I sold my IBM shares back at 170, which was almost a year ago now. Am I interested at 154? I'd like it to come in more. And this is just a company that just doesn't have growth right now. There's a lot of reasons not to come in here and buy it this morning. It's just not for me.
How many shares did he sell? Do we
know how many actual shares?
I think someone put in the chat actually. 150. Is that actually right? 150 million?
Probably.
Oh,
from Fuzzy?
Really?
What's the average daily volume on IBM?
Nah, I see like 4 or 5 million. Is the daily
I
average
haven't confirmed
volume.
that. I'll try to confirm.
Okay, maybe 150 then. If it's
It's not 150.
It would take him weeks, months. He was the only seller in the first quarter. No, I'm curious. Find out, Spencer, how many shares he actually sold. But it is difficult. I mean, if you're an institutional trader and you are working huge money and working huge orders, I think sometimes it's hard for me to sell 500,000 shares of something, at certain times of the day. And, when you're trying to work out of 1 million shares of something, it takes a long time, and you've got to be very strategic in the way you do that. They're using algorithms, they're doing them in different ways, but, it's definitely going to have an impact. It's just as a matter of how big your footprint is going to be from those.
Yeah, that number is way off. So he owned 81 million shares at the end of the year. So he sold off a third of that 81 million share stake. About a third, we should say.
So he sold about 20 to 30 million shares.
That's a lot.
He's sold like 6 days worth of volume, Joel.
And Dennis,
that might be the reason it went from 180 to 170.
To answer your question, he actually said when it got above 180, we actually sold a reasonable amount of stock. So yes, he did sell above 180.
Holy! I mean, he couldn't have got.
And I'm just saying this morning, if you're coming in here and you're running your own little money, you're running you're managing your own little investment portfolio for your wife and kids, and all you do is follow Warren Buffett. Well, if he's selling at 180, you're selling this more at 154. You're not even close to following him. You're way off. So if you're an IBM, the reason to be an IBM is because you like the company fundamentals. I don't come and buy a stock because Warren Buffett likes it, or I don't come and buy a stock because I like it. If I'm going to buy a stock, it's because I like the company And that's from an investment portfolio standpoint, trading completely different animal. But I just can't see, coming in here and selling your position in IBM because Warren sold it this morning because he sold just got to tell you. He sold above 180. You're at 154. Holy cow. You missed 20% of the move.
All right, let's move on to something else. We've
been arguing about this.
That's 17 minutes about one stock there. So maybe let's go to Shake Shack. Shake Shack. You reported yesterday.
Shack.
What?
You know that song.
I don't know what you're talking about. I didn't hear you say it. All right,
whatever. Shack.
No. Okay. Yes.
Shake Shack.
We've all heard that song.
I have to spell it out for you.
We've all heard that. I didn't hear what you said the first time. Okay, I got it now. Shake Shack Q1 adjusted EPS 10 cents versus an 8-cent estimate. Sales of 76.7 million versus 74.7. So they beat on the sales. They beat on the EPS too. They're also raising their outlook for the fiscal year. They see sales from. It was 349 to 353 million. Now it's 351 to 355. So they bumped up the sales for the fiscal year and good Q1 numbers.
They hit the stock hard last night. This stock traded down to 28 and a quarter. $28.25. It is now at 34.59. So if you were buying the dip, the buy the dippers win again, Joel. You were buying the dip last night. It was down 5 points. It is now trading green. That is incredible comeback here for Shake Shack.
I took out the all-time low, which is very interesting here. The all-time low was well into the 30 hand. Well, no, 30 even. So if you were just sticking a bid out there, you were scratching your head when it went to 28 and change. Now it's just on the rebound. Just got to go to the daily charts here. Really, the only thing of significance is 4, 5, 6 highs right here at the 34.50, 60 level. That's where we just made a high at recently. So, man, this thing bust out through there. It's going to keep on going, but definitely opening into some major resistance on a pullback after this kind of run. I'm keeping an eye on yesterday's close at 33.12.
Other earnings news, CBS gets a pop here in the pre-market, and they reported, Spencer, how are the CBS numbers?
CBS Q1 adjusted EPS of $1.04 versus a 96-cent estimate. Sales of $3.34 billion versus $3.27 billion. So it beat on the top and it beat on the bottom for CBS.
Media stocks have been getting killed. It got killed yesterday, but it bounced back. It was actually a pretty okay candle because it closed near the highs of the day. Now you get the good earnings, getting a pop back. I'll say $66. This was the level of support back in March. We made a low just under 66. Also in February, we made a low just under 66. I'm going with the old resistance or old support becomes new resistance trick, and I'm saying there's major resistance up at that 66 area.
All right, we did get a pop right to yesterday. Oh no, we're above yesterday's high, which was 64.24. Dennis is pointing at the 2-day high of 65.88. That corresponds with the pre-market high at 66. I'll give that minor resistance if, in fact, you could break through there. Your 3-day high is way up at 67, but good report there out of CBS.
There's so many people, if you think about this stock was trading at 61 yesterday. So 61.08. Now you're getting a chance up here at 65, 66 with these other media stocks. Look at Viacom. Viacom's been absolutely murdered. VIAB, a disaster. $44 2 days ago. $37 here, $36 yesterday. Disney, murdered yesterday. They did come back. A lot of these came back. Fox, I had a good trade on Fox actually yesterday. On the short side, I actually got covered near the low too. But it bounced back too. But that being said, a lot of overhead supply, and there's a lot of people who've been buying over the course of the last couple of months underwater in all of these stocks. So I'm saying CBS is overhead supply, and I'm not buying it up here at 66 after just traded 61 yesterday.
Hey, where'd you cover your fizz yesterday?
I know. I covered at the open. I covered 85, which, was obviously not a good cover because it got up to 85.95 and then continued to fizz out, Joel. You told me not to cover it. You're right. But Scalper Blood and me is like, nah, take it.
Yeah, and that traded down on big volume. Just a general comment here on these media stocks. I mean, there's something going on in the media landscape. There's going to be some big changes. Obviously, the street is favoring Netflix because they did not have that great a report, and they have just been chugging higher ever since. So, I mean, I just don't know. There's something just like there's going to be driverless cars, and there's something going on in the
World is
car
changing.
industry. Yeah, world is changing. I just wish I could figure out so I can make some money off it.
Me and Joel are too old school to figure that out. I don't. There's a lot
Well,
of
that's
things.
why you have me here.
What's that?
I said that's why you have me.
Okay, that's why we have Spencer,
Yeah.
the young buck, to tell us the new trends,
Right.
what's going to be hot, where the world's changing, and I don't know. And that's why we have the stock market too, I guess, to price it out. But speaking of world changing, Tesla fell through the 300 yesterday, Joel.
I'm sorry?
Tesla just.
Oh, it did. It
world
did.
changing stocks. It did not hold at 300. I said on the show yesterday, it's got to hold 300. It did not yesterday. As long as it's below 300, it's concerning. It needs to get back up over 300 in a hurry because the chart's starting to look a little bit broken.
Can I? I'm going to ask a question here, and Nick Shaheen has said this, and I've heard other people on CNBC that Tesla is more than a motor, than a car company, and you have to look at it more as a car company and a technology company.
We've been saying that.
Everyone's been everyone's been saying that, but what the hell are they doing? Besides making cars,
They got a lot of
Not
ideas. You're
A lot of
buying
ideas.
Elon Musk's brain. That's what you're doing.
That's what you're buying?
I think so. That's why they're paying such a multiple, because they're buying Elon Musk's brain.
Yeah.
And he's got idea. I'll tell you. He was tweeting about some tunnel digger or something last night. I saw it go by. Go to the Elon Musk tweet. I saw it go by my timeline. He got so many different ideas, man. That guy's got ideas. I don't know if they're going to materialize into money ever, but man, he has ideas. What was his tweet last night, Spencer? I'm going. Elon Musk.
Gosh. Okay, let's go.
Going to Twitter. I saw something about a tunnel digger now.
Well, yeah. I mean,
where is
the
it?
Tunnel and the high-speed rail.
Have you heard about this tunnel digger?
No.
There's the tunnel.
I got a lot of
there's the
ideas too,
high-speed
Dennis.
rail.
Here he
I
says, thinking about a name for our first tunneling machine. Now he's creating tunneling machines. That guy got the ideas, man. SpaceX. He is all over the place with ideas. I tell you, he must be the biggest idea generator in the whole world. I don't know if any of them are going to turn to money, but wow, man, the guy thinks.
I did hear Adam Jonas on CNBC last night, and he was two interesting points from him. One was, he called the stock going to 300, right? And that was back at the beginning of the year. But he said, no way did he think it would do it in 3 or 4 months. So even he thinks the move got a little ahead of itself. And then the other thing he was talking about, and this is the quote unquote, other ideas, is that they're going to have the technology from all the, when people are mobile. If you think about how much time people spend in their car, right? And what are they doing? They're not supposed to be surfing the internet. But if you have a driverless car, what are you going to be doing in your car? You're going to be on the internet, right? You're going to be mobile. You'll be surfing. You'll be reading a book, having a cocktail or something. So they're looking for Tesla to, create, to monopolize and get the most use out of data from what all the people, the time that they spend in their cars. So that and a nickel will get you a cup of coffee.
I mean, Google's trying to create the driverless car too. Google has them. Google has them out there. The Maps car that goes around drives the maps. Isn't one of those cars driverless out in California? Didn't we talk about that before?
That's not new. I mean, it's new in the fact that it's not, mass produced, but it's not new.
The laws too. I believe California is the only state, right, that has you can actually have driverless cars there.
I don't actually know that.
I thought I read that somewhere.
Yeah. All right.
Anyways, Tesla, incredible. The guy can think like crazy. I just, it's a valuation issue for me. It's always been a valuation for me. It stays a valuation issue for me. So, but being said, last couple days, charts starting to look a little bit broken. There's a lot of people sitting long on this thing. You always seem to have a washout. I think 280. If Tesla gets down to 280, that was where it broke out from. If you go back in February, we got up to 280. Then we dipped in March. We went and tested it for 3 or 4 days just at the end of March. We finally broke out from 280. That's the level where I think it bounces. If it continues to sell off, which it's sold off 25 points in 3 days, I think 280 is the level where it might take a bounce.
I'd like to see it fill those gaps down to 270, but we'll see. We'll see it today. It's just kind of trading flat. So when something's trading flat in the pre-market, It's up 94 cents. Keep an eye on that close of 95.46 and see if buyers step in ahead of yesterday's low at 90.76.
Ron in the UK wants to know about the Activision numbers, ATVI. Stock is trading flat here now, but we were saying yesterday it needs to blow it away to go higher. It kind of did blow it away, but it's still not going higher. Spencer, details ATVI.
I was saying that exact same thing yesterday. I was like, I don't understand this thing. Nothing. And I was thinking about you, Dennis, because they report. I'll say the numbers first, and then I'll get to my thought process. But anyway, Q4 EPS 72 cents versus 58 cents year over year. GAAP EPS 56 cents. Sales 1.726 billion versus 1.455. That must be a typo. Billion year over year as well. So good year over year growth. They do see their Q2 adjusted EPS at 38 cents versus the 32-cent estimate. So beat on that. Sales higher as well. And for the fiscal year, EPS coming in a little lower, sales coming in a little lower. But good
Pretty good quarter, though.
Good for the Q2 and really good for the Q1. And I was watching this thing, and I don't get it. I don't get it. I don't know why
Why it wasn't popping?
Yeah.
It's just because it's ran up so much. It was $40 back in February, $53.
You know what?
The run's already there. They priced
That's what
in
Brent
it.
was saying. That's exactly what Brent was saying. He was like,
Yeah, they priced it in. And that's what we were saying yesterday on the pre-market show. They really need to blow it away. They kind of blew it away. It wasn't good enough yet. So it's hard to buy stocks when they've been running straight up into the earnings reports. It almost seems like, at least at this earnings report, it's been a no-brainer probably 4 out of 5 times as these stocks went down, actually, after reporting earnings. And like we said, the opposite is true, too. The stocks that have been really getting beat up are the stocks that they're buying. So, that's just the way it's been off this earnings report. Or earnings season.
A big bracket off the initial headline news. You got a pop up to 54.10. You got a low of 50.78, and then you immediately rebounded. Currently trading in the green on the session. I just have to still give significance to the daily charts here. Triple top at 53.35 area from the last 3 sessions. All-time closing high 53.10. So you're holding that 53 handle. Yeah, this move can continue. Think you take out 53, could start to work in the 52 handle. But nice report not being rewarded. All-time high close 53.10. That's the number of the day in Activision. And we'll have to get Michael Pachter on in the next week or two after earnings season calms down. He's been pretty bullish to stock for quite some time.
8:29. Let's get Brent or Spencer to preview the jobs number that's coming out here at 8:30. I'm going to get off for 2 minutes, 3 minutes, try to trade this number. I hope we have more than a 1-point move in the S&P futures. It's been such muted activity. So disappointing lately. Maybe we'll get some movement, but I'm not counting on it.
Yeah.
Okay. Go ahead.
Dennis, you were saying, or maybe it was last time, 1% move. Oh, what volatility? All right. Anyway, non-farm payroll we're looking at 185,000 for the estimate there. Private also 185,000. Unemployment rate we're looking for 4.6%. So 185, and 4.6% unemployment is what we're looking for in the number coming out in just under a minute. Jobs report imminent. Joel, any action in the SPOOs? Joel? Did we lose you? All right.
Nope. I was getting a drink of water there.
Okay.
Sorry about that.
That's okay.
Getting a drink of water.
All right.
No one's jumping the gun yet. We're getting a little pop here. Popping up. Good number?
Looking like a good number there. It was a beat 211 on the non-farm, and looking for the private. Brent's gonna read it to me because it really has to be in the pro. It's in the pro. 211 non-farm payroll again. 185 was the estimate. Unemployment rate 4.4%. We're looking for 4.6%. Private payroll is 194,000 versus 185. So beat on the private, beat on the non-farm, and a beat on the unemployment. So good number all around. Anything going on that you're seeing?
Oh gosh. Should we just stop? From now on, we're not going to let Dennis off during the unemployment number because there's absolutely nothing going on. You got a little spike up to 88.75. Now you're at 87 even.
And so anyway, yeah, I mean, as far as prior month, we're looking for, or it was 4.5% the unemployment rate. So it was 4.5%. Now it's 4.4%. Private payrolls were 89,000 last month, 194,000 this month. Non-farm was 98,000 last month. Now it's 211,000. So really, really good numbers that I suspect we'll see.
Crickets.
I suspect we'll see. That was fast.
Crickets. I'll sum it all up for you. Crickets. We didn't even move a point, Joel, did we? Did we move a point?
We
Maybe
got to
points.
Yeah, we got to 88.75. That was the interday high from yesterday. The only thing I have to say is Trump is doing an incredible job with the economy and
Just
everything.
tremendous numbers. Just the best numbers ever. They're just the best. Everyone has jobs. Everyone has jobs.
Yeah.
There is just no volatility in this market. There is no fear in this market. There is just, muted trading activity every single day. I saw a tweet. I don't know who tweeted out, but they were saying that the S&P futures have moved, and I guess it's on maybe a closing basis, less than 5 points for what is it, like a 7 consecutive sessions or something now? Less than 5 points. I mean, we're up here, at 2,400 almost on the S&P. 5-point move. You're talking about a point. What is it? 0.2% move, a quarter of a percent is what we're moving on a daily basis.
Hey Spencer, pull up the daily charts here, and we have been in a trick since that ridiculous gap up over the French election. Which is that this weekend or when is that?
Sunday night.
Sunday night. So that could be a big change in the market. But listen to the last closes here in the S&Ps, and I'm going back to April 28th. 86 even, 87 even, 85.75, 85 and a half, and 87. Well, we're trading at 87 and 3/4 right now.
This is just quiet. Is it the calm before the storm? Are we going to get a move here eventually, Joel, or are we just stuck with this VIX eventually going under 10 and going to stay under 10? Because as a trader, I hate this market. This, little market that doesn't do anything. It's difficult to make money when the stocks don't move.
All I'm going to say, and I like to talk to Nick Shaheen a lot. He comes on the show. We talk about different things. And one thing he's just been stressing to me, and I know I'm still stuck on my bet with you, is like there's no reason to be short. There's nothing going on to warrant. I mean, no matter what you think, I guess maybe the French election, if you think that lady's going to pull an upset, but it's just I mean, every dip that we had under 23.80 last week, 76, 77, 75 and a half. I mean, at this point, even if you want to be short, what is there telling you to be short the market? And, me coming, not a perma bear, definitely my portfolio is not perma bear. Maybe I come across it on the show. I mean, what's the impetus to be short? And every time this market goes down, it just seems to come back. And it's been a good earnings season too, right? I mean, it's been some beats. So it's hard because there's no you got your resistance levels, but major consolidation. Actually, at the beginning of the week, I was thinking of putting on, like a straddle, because strangle, because I really thought this market was going to move. I'd be dead money. Dead money on this.
Buying options just isn't working right now. Like, it's just, there's just no volatility.
Right.
So, look at that bet we made. We made this bet a week and a half ago. It was literally 25 points, in either direction. And we haven't really moved. I mean, we could be in this bet for another month at this rate.
Yeah, we should probably just cancel it.
It's just been too long. It's like time expired.
A weekly option.
All right.
All right, go get it,
8:35 now. We're going to go take a quick break and grab Salem Abraham, president of Abraham Trading. He trades commodities. He trades futures. He's been using his models for over 25 years. So we'll be right back with Mr. Abraham.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elcon, along with Dennis Dick and Spencer Israel working the boards. And we have a commodity trader on the line, Salem Abraham, president of Abraham Trading. Salem, how you doing today?
Hey, great, Joel. How are you?
We're doing good here. We were just joking before you came on the show. The unemployment number came on. You didn't even get a 2.5 or 3 point move on this. Now you're a commodity trader. Tell us about what you've been doing with this low volatility market.
Well, you just got to be patient, I think. The vulture's a patient bird, I say. So you got to wait, and you just got to know that, and be ready for when things start moving. You can't ever make money if something stays in the same spot. Whether you're long or short, you can't make money. So you just got to be patient and make sure you don't give up. Big part of trading is not losing money. So that's what you do then. And when you find opportunities, you try to make the most of them.
Right. Discipline and sitting on hands is strategies that we like to talk about quite a bit. You're a turtle trader, a former turtle trader. I'm not sure. We got some younger listeners on here. The famous Richard Dennis of C&D Commodities back when I was on the floor. Just tell us about how you were chosen to become a turtle, what you learned from Richard Dennis, and what new twist have you put into your trading systems?
Sure. Well, I'm not a turtle. What I am, they tend to call me a second generation turtle. So I was introduced to trading by a turtle, but the turtle program is a fascinating thing. Richard Dennis and Bill Eckhart were legendary traders, and they ran an ad in the paper. And, back when there were, newspapers instead of the internet like Benzinga does. So in the old days. And so they ended up over a couple of years hired 20 traders out of over 1,000 applications and taught them to trade and taught them some trading ideas, generally trend following. And Jerry Parker with Chesapeake Capital, he was one of the 20. And Jerry introduced me to the idea of trading some. And so when way back in 1987 it was. So yeah, I've been doing it for 30 years though, and a lot has changed for me. I didn't get the full version of the turtle knowledge. Jerry Parker was somewhat, he held back a lot of information just because it was proprietary back at the time, but basically said, hey, trend following is a good way to make money. And I was off in college and started researching. So I'm just a math guy and computer guy. I like running data and looking at numbers, and you see that, hey, there's something to this. Some of these markets do have a tendency to trend. And so I developed some models and been trading for the last 30 years. But that was the start of it. But over time, there's been a lot of other things we've introduced with even mean reversion ideas and shorter term ideas, and so continued to broaden the different quantitative models that we use, and we broaden the markets. But the original quantitative model was some turtle ideas from way back, which were trend following ideas.
All right. So do you just have a group of commodities that you follow and you just keep an eye on them and you wait for your setups? Or are you just very open-minded? You don't have a stable of commodities that you trade, and you let you let the systems kind of kick some signals in for you.
Right. What we do, we follow 73 markets. So 55%, they're all futures markets, only futures. So 55% are commodity futures and 45% are financial futures. So, from stock index to currencies, interest rates, to then, things from meats, grains, metals, energies. And so we follow those markets, and we have models. We have a total of 49 different models, and those models are each looking for different types of opportunities. And when they see those opportunities, and we put on a position, and our MO is basically manage risk, have very small trade zone, and you want to, some people say you got to bet big to win big, but I think if you basically bet a lot of small good bets, you can win big. So it's wearing them down with the odds of, hit lots of singles. You can move the needle with lots of singles and good opportunities. So the idea is if you can increase the number of times you get to flip that coin, that's in your favor, and then you smooth out the volatility and you make money over the long term. So that's it. You just manage your risk.
All right, before we get into some specific commodities here, talk about the managed futures environment over the last few years. CTAs, the money flowing in, the money flowing out, the performance. Just describe the landscape for us.
Sure. Well, so, in 2008, managed futures was a really, the industry made 15%. So it really kind of, it gained a lot of interest starting in 2008. But since 2008, it's been, there's 2010 was a good year, 14 was a good year, but really it's been pretty flat. And last year it was flat to down a little. We were up about 1.5%, but it's been lackluster since 2008, and so there's been some frustration with that. But then it's interesting over the last really 18 months or so, with and particularly probably the last 6 to 12 months, that with stocks getting pretty toppy, and people are I think people are concerned and about the environment we're in, because commodity futures and the managed future space tends to do well if bad things happen. Unfortunately, if when you have wars, droughts, if an economic calamity, managed futures is one of just a very few investment class, an asset class that can do well. So it's gotten a lot of interest lately. People, there's been money coming to the space, and I think for good reason. You want to look at the rearview mirror, but we're not fighting the last war, and so when you look, you got to say, okay, well, I know there's not been a lot of volatility lately, but is that going to be how it's always going to be? And I think some things are happening in the broader economy that would indicate there may be some opportunities in the managed future space. So we're excited about some of the things going on, and we're not rooting for economic calamity, but sometimes it comes no matter what. The storms come.
Just a little bit of volatility. And once again, one more question before we go into specific commodities. What about the fundamentals? Do your models, factor in the fundamentals? For example, OPEC, if you listen to OPEC, crude's going to, 60, 70, 80 bucks. Is there any discretion or any way that you use fundamental information in your models?
Well, I think, basically we look at price as the biggest factor with us. We can look at volume as well, but price is the main factor. And certainly in the price, the fundamentals are baked in there, and they're a part of where the price is and what's moving the price. But we step back a bit from the actual analyzing the fundamentals. We let the market itself analyze the fundamentals and then show us a price. And so what we see is, and the basic core of what we look at is human emotion. And as humans, we are emotional, and oftentimes buy-sell decisions are driven by emotion. And if you know that out of 100 people, 60 are going to buy over the next week and 40 are going to sell, you know that there's going to be some upward pressure in that market. Well, so if emotion predicts buy-sell signals to some degree, and it gives you an edge, and if you can analyze everyone's emotions by this price is going to make people be emotional in this way, and therefore they're going to be buying. So you're basically getting in front of their emotions, and you get in front of the market which way they're going to be leaning over the next week or two. So it's something that I got a finance degree from Notre Dame. They told me it wouldn't work at Notre Dame, but over the last 30 years, we've had up years and down years, but we've averaged, about a 16% average annual rate of return. So I was certain they were wrong 30 years ago from my research, and I'm more certain now. So I know it's hard to explain, but you just find that there's times that people get emotional in markets, and if we had more time, we could talk about a lot of fun things about that. But
okay.
But yeah, that's it.
Yeah, emotion. We talk a lot about that.
So fundamentals are there, but the emotions are what we're trying to tap into their emotions.
All right, let's move on to the crude oil market. Now, you said you have been leading or have a short position in it. Just talk about it, when you got into it, what kind of target you have for it, and what's on your radar here. I believe, what are we now in the June crude, basis the June crude contract?
Right, the June is what we're looking at. And yeah, we've been, we've been pretty neutral on crude, and we've been on the sidelines. But over the last 3 or 4 days, we've taken some short positions in crude oil and natural gas, probably a bigger position short natural gas, and so and the products as well, the heating oil and gasoline. And so, we don't have a target. One of the things we generally don't do is have targets. We just look for weakness, and then we feel like there's going to be some follow through. And so certainly over the last week, those markets have shown some weakness, and enough weakness for us to be concerned that they're going to continue down. So we're going to get on board with those trades and see how it plays out. But I mean, I would say generally time is more. It's kind of like baking a cake. Or it takes 20 minutes to bake a cake, and usually some of these trades, if they're going to unfold, they'll unfold in a period of 2 to 4 weeks. So we look at crude oil and the energy space being weak over the next 2 to 4 weeks. And if it continues to be weak, we'll sit on those trades. And but if it shows some strength, we would close them out. But so I'm looking 2 to 4 weeks out. I think crude could show some weakness.
Very interesting point there by Salem. He's not really trying to pick a target. An example, Dennis just had an area in Fizz that he wanted to get out yesterday, not a specific target. And letting something go in your favor, it's hard enough to get a trade, going the right way. But one thing is to get it going your right way, reap the most out of it. And sometimes, giving yourself a little buffer on the upside can lead to a lot more profits. A quick update on the S&P 500 index futures here. A little bit of a delayed reaction. We just popped to 90.75. That was your high from Monday and Thursday, so big resistance level there. During a conversation yesterday, you mentioned you were taking a look at the cocoa market. Give us your potential setup or trade in cocoa. I think cocoa is an amazing, it's been down over, in the last year, it's gone down over 40%, Joel. And I think it's a good example of what you do, how to sit with a trade. So we've been short cocoa now, which is crazy for us. A long trade for us is 3 or 4 months. So to be short a year, you've got to have big weakness. So we've just been sitting short in both the U.S. cocoa and the London cocoa markets. And it's one that you don't know how far it's going to go. And you sit and you sit and you keep making money with it, with a short, and it's hard to sit. And I think you brought up a good point. Sometimes you just need to get in the trade. And if it's a good trade, sit. I've heard people say, well, you don't go broke taking a profit. But I would argue you can if you don't make the most of the profitable opportunities the market gives you. And so when, I think cocoa is a good example of that, where when you get in, you have no idea it's going to go off 40 to 45%, but it does. And by being patient and disciplined and being able to sit in a good trade, you can make that money. All right.
We think it still could go lower. I mean, cocoa is, and that's again, the crazy part of what we do. It goes contrary to emotion, is to say, okay, so market's been down 45%, you're still short? And you go, you bet. And we think it could keep going lower. So,
what is the cocoa symbol? Wait, real quick. What's the cocoa symbol on TOS? Do you know? I'm looking. I thought it was CC. I guess
maybe C. Well, CC. We're the July cocoa. I don't know on. I don't know.
I'm not sure. All right. Anyway, moving on.
CO, CN.
Yeah. Anyway.
But it's the July contract.
All right. Moving on.
So it's up today. So that's okay. So
alrighty.
That's up today.
Salem Abraham, president of Abraham Trading, experienced commodity trading advisor, giving us a look at some other markets that we don't follow. Salem, great speaking to you, and we are not going to wait so long next time to get you back on again.
You bet, Joel. Great to visit with you, and we appreciate all you all do at Benzinga, okay?
Okay. All right.
All right. You have a great day. Bye-bye.
Thank you. S&P futures up 4.5 at 23.90. Dennis, any action in the stocks there?
No. we popped a little bit. Financials catching a little bit of a bid here. I can see Goldman's up a little. Bank of America's up 0.5%, but it was muted activity after this jobs number. Very quiet. There is a few individual movers, like we've already talked all morning. We talked for 16 minutes about IBM. Still trading down $5.65 from the warrant sell. Imbalance got 110,000 to sell right now. It's probably going to grow. So looks like it's going to be a bad day for Big Blue. Bank of America, 84,000 to buy. Like we already said, some of some of these banks are trading higher. Twitter 100,000 to sell. TWTR kind of had a little bit of a red candle there yesterday for the first time there. I think it needs to hold yesterday's low, which was 1836, or maybe some of this gravy train starts to come out of it. Procter Gamble 20,000 to sell. Disney 38,000 to sell. GE 51,000 to sell. There's some buys too though. Ford 63,000 to buy. That's about it. They're pretty small. Merck 63,000 to sell. So it's kind of mixed. I do notice that gold is trading a little bit up here. We've had a real rough couple days in gold and silver. The miners just getting absolutely annihilated here for about a week and a half. They're bouncing a little bit here this morning. Barrick Gold trading up 1% after being down. It was $19 a week and a half ago, Joel. ABX at 16 now. I mean, these miners have really been beat up.
I just wanted to make a quick comment on Twitter here. Before the last earnings report, the day before, I always like to look at those numbers. You had an 1877 high and an 1872 close. You've come all the way back on this report. You went through it a little bit yesterday at 1889, 1848. So important area for Twitter today. I call that whole 1848 really up to 1880. Really a good resistance area. Move will not continue unless you can clear that and clear $19. Back to our earnings stock here. We haven't covered Herbalife.
HLF.
Yep, HLF reporting yesterday after the bell there. They reported a Q1 adjusted EPS of $1.24 versus 89 cents, sales of $1.1 billion versus $1.05 billion estimate. So they beat on the sales and they beat on the EPS. They're also raising their fiscal year guidance. The EPS was $3.65 to $4.05. That was the range. Now it's $4.05 to $4.45. They see Q2 EPS at 88 cents versus $1.08. That is at the low end of the estimate. So we're seeing a relatively weak Q2, but a very strong fiscal year.
And it's bouncing here, up $3.85 in the pre-market, taking out the high of the move here. It's been a pretty impressive run here for Herbalife from the beginning of the year. Started the year down at $49, up here at $66 here now. I guess this is the definition of chasing. And just something else to note, if you go out to the weeklies or even out to the monthlies on this, you can see, really, when you just put it in perspective, we've been range bound kind of for the last 4 years between $30 and $80. And, it's got down a few times down in the 40s. And every time it gets up in the 60s and 70s, it seems to be more resistive here. So if you're taking a longer term perspective, this is where sellers have started to materialize up in these levels, although it has the wind in its sails right now.
Pre-market high. You got a pre-market high of 69.29.
Wow.
Yeah. And now that we backed off there, I mean, you got to really respect that resistance level. You backed off almost $2.5, $3 from there, way above the former high of the move. So, I mean, 70, a psychological level as well. I'll just alert our traders. Back in August of 2016, you had a high at 69.40. So a lot of resistance up there, Dennis, if in fact we can get off this 66.5 area.
Only got 5 minutes left here. Spencer wants to get the ratings in. What are you looking at, Spencer? There's a few. What are you looking at that's really jumping out at you?
Well, I didn't see any upgrades that really jumped out to me. A lot of upgrades this morning, all mostly reactions to earnings. A couple of interesting downgrades, though, this morning. We have Goldman Sachs downgrading Yum China from buy to hold, and then we have Celgene being downgraded at Argus, also from buy to hold.
Yum China's had a run. YUMC and Goldman, they've got guts. They will fade moves, where everybody else seems to just jump on board on the bandwagon. Goldman's still got a little bit of contrarian in them. And, this is a contrarian call because YUMC has been straight up for a month. And I'm not sure if it's a valuation issue, but they had a buy. They're moving to neutral, so maybe it is. Stock is not made a trade here this morning. It's offered down here in the pre-market. So Yum China here, a little red candle yesterday. Goldman getting bearish today.
And then
nice
not
run.
Bearish, but neutral.
Super run, and I don't see it trading a whole lot here in the pre-market. I mean, great run. I mean, you look at that monthly candle, and holy smokes, a low of 27.12 in April. We've hit 35.57. backing off. All-time closing high, was that from yesterday? No, all-time closing high 35.08. So not fading Goldman on this one. Coming back on the downside, you do have three lows at the 34.40 area. Then things open up to 34 and then the lower 33 handle.
A couple.
We got Celgene downgraded at Argus, CELG, trading down the pre-market. Full disclosure, I do have this one in my investment portfolio. It's been in there for about 5 years, so I'm sticking with it. What are your thoughts here, just technically, Joel, Celgene, CELG?
All right, just kind of hanging out. Did get hit, but not by, what do we go off the board at? Went off the board at 24.46. Tight ranges here. I think I'd give myself down to 123 here. I see three lows in the last 5 sessions at the 123 area. So if it takes that out, maybe a little bit more downside coming back on the upside. You had a strong day yesterday, closing near the high at 124.46. So keeping an eye on the mark, 124.46.
A couple quick from the chat. First, let's get to Z. That's Dr. J asking about Zillow Group. They reported, let me pull up the numbers actually. They reported earnings there yesterday after the bell, right? Q1 EPS with a 3-cent loss, may not compare to a 6-cent estimate. Sales of $245.75 million versus 236, or just under $237 million. So they're coming in higher than the sales estimate, and again, the 3-cent loss on the EPS. They do see a Q2 net loss of about $30 to $35 million, and sales are coming in line with the estimate.
I mean, this is a new high for Z, but remember they have both stocks, ZG too, Zillow Group. So there's 2 stocks here, and Zillow Group is the legacy one. If you want the history of it, before they broke up into 2 separate, stocks. ZG was about $164 back in 2014. So this actually looks like a technical breakout to me. Like if you look, we got killed back in July of 2015, or actually it was August 2015, when we went down, and now we're coming back. So $40 here was big level. It's a breakout here for ZG.
Yeah, they got really excited in the pre-market. They took it up to $43.50. Now just hanging out at the $41 area. Stays above 40.79. That's the range from yesterday. That was a high. That would fill the gap. So more upside. Don't think you'll see that pre-market high, though, of 43.50.
And then someone else, Downward Dog, in the chat wanting to know about CME. So we'll pull that one up on the screen there. CME Group, they reported a few weeks ago, so no earnings to speak of there, but any comments, guys, on CME?
It's trying to fill that gap, Joel. It got hit. It's been coming back since the earnings report. I just say lots of overhead supply. It looks like around that 120, and then you can look at the 3 tops there.
Yep.
120.79, 120.73, 120.69. So that's, a major point for me. This starts getting up over 120. I start looking at that and saying, there's some resistance ahead. It's not going to be as easy sailing as it has been last week.
Filled the gap, or almost filled it, missed it by 11 cents yesterday. So 119.18 to 119.29. That's a significant area if you get back up there today. Not having a major breakout on the upside, though, until you clear those 3 highs that Dennis mentioned at the 120.75 area.
All right, Joel, this is your favorite time of the year. We're going to transition away from the markets just for a few minutes, and I'm going to humor you, and you're going to give us a little bit of a preview, if you can, on the Kentucky Derby this weekend. We know you love your horses, so Joel, just run with it.
The most exciting 2 minutes in sports. Maybe you guys could catch the great video I did with Brentster yesterday. When you're looking at the Derby winner, you want to look at the Derby preps, and there's 4 or 5 races where horses get together and qualify. Your favorite's going to be Classic Empire. He was a 2-year-old champ, but that has not always translated into a Derby winner, so I will be laying off the favorite. The winner, if you want to, stay with a horse that beat the favorite, but won't have the favorite odds, it's Irish War Cry coming out of the 17 hole. He's going off at 16 to 1. A little attention, too, on Gormley, the Santa Anita winner, but my money is going on the number 5. That's Always Dreamin'. I like the post position and the fact that all the horses that will be his competition are to the outside of him so he can make them work to get to that first quarter, tuck in the rail, and then have a lot for that big quarter-mile stretch at Churchill Downs. I'll include Minerva, McCracken, Irish Warquay, and Gormley, and some perfectas. And if you're looking for a long shot here, my buddy Ira is telling me IRAP. I don't know if he likes it just because of the name. Coming out of the 9-hole, he's a morning line at 20-1. So there's your long shot. He was the winner of the Bluegrass. Spencer, you want to wrap things up and preview the show for Monday?
Yep, looking ahead to next week. We got a crazy week next week ahead of us. Why? Because it's the Benzinga FinTech Awards next Thursday in New York City. Joel and I will be there, so we're going to have a bit of a crazy schedule with this show, but we'll let you guys know about what is happening as far as guests and scheduling and all that stuff, because Joel and I will both be traveling, so we got stuff going on. But Tommy Lackey on Monday. Tuesday, Sasha Evdokov. If you have heard that name or seen his videos on YouTube, a very, very popular YouTube personality and likes to explain investing pretty simply. Wednesday, Tom Osprey, a long time technical analyst, who's going to share with us his charts and the techniques he's learned over the course of his career. That's just a few of the guests on the docket for next week. So that's it for us today. Hope you enjoyed our chat with Salem Abraham. Real quick, if you want to know more about the Benzinga FinTech Awards, go to benzingafintech.com or bzawards.com. Again, that is next Thursday in New York City. If you're looking for a discount code, I can hook you up. Just email premarket@benzinga.com. and I will see that email. That's it for us today. Have a good rest of your day and a good weekend. We'll be back with you folks on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.